A promise broken, Bitcoin's rise, and Mt. Gox's fall. The story of Bitcoin is one of innovation, excitement, and, ultimately, caution. It's a tale that captures the imagination and serves as a stark reminder of the risks involved in uncharted financial territories. From its inception, Bitcoin promised a revolution in the way we think about money and financial transactions. Bitcoin burst onto the scene with a promise of a new financial era, one that was free from the constraints of traditional banking systems and government regulations. It was a revolutionary idea that quickly gained traction, capturing the attention of tech enthusiasts, libertarians, and forward-thinking investors alike. It offered a new kind of money. This was not just any money, but a digital currency that could be transferred instantly across the globe, without the need for intermediaries. This innovation promised to make financial transactions faster, cheaper, and more secure. This money was digital, decentralized, and free from the control of governments and banks. People were excited. They saw it as a way to democratize finance, to give power back to the people. The idea of a decentralized financial system resonated with many who were disillusioned with traditional banking. They saw the potential for a more open and equitable financial system, a system where everyone had an equal opportunity to participate and benefit. The enthusiasm was palpable, and the community around Bitcoin began to grow rapidly. In the early days, one name became synonymous with Bitcoin: Mt. Gox. Originally a platform for trading Magic: The Gathering cards, it quickly pivoted to become the largest Bitcoin exchange in the world. This transformation marked a significant milestone in Bitcoin's journey. This exchange was where most Bitcoin trades took place. It was the beating heart of the Bitcoin economy, handling over 70% of all Bitcoin transactions at its peak. The sheer volume of trades made Mt. Gox a critical player in the Bitcoin ecosystem. It was a central hub for this new and exciting world, a place where enthusiasts, traders, and investors came together to be part of the digital currency revolution. The energy and optimism were infectious. But the story of Mt. Gox is not one of triumph. Despite its early success, the exchange was plagued by security issues, mismanagement, and a lack of regulatory oversight. These problems would eventually lead to its downfall. It's a story of a spectacular collapse. A cautionary tale of greed, mismanagement, and the dangers of unregulated markets. In 2014, Mt. Gox filed for bankruptcy, revealing that it had lost 850,000 bitcoins, worth around $450 million at the time. The magnitude of this loss was staggering. The fall of Mt. Gox shook the Bitcoin community to its core. Investors were left devastated, and trust in the fledgling cryptocurrency was severely damaged. The repercussions were felt far and wide. It left many questioning the viability of this nascent technology. Could Bitcoin recover from such a massive blow? Was the dream of a decentralized financial system over before it had truly begun? These were the questions on everyone's mind. This is the story of the biggest Bitcoin scandal nobody wants you to know. A story that serves as a reminder of the importance of security, regulation, and trust in the world of digital currencies. The lessons learned from Mt. Gox continue to shape the future of cryptocurrency. The rise of digital gold Bitcoin's early days. In the aftermath of the 2008 financial crisis, distrust in traditional financial institutions was at an all-time high. People were looking for alternatives. Bitcoin, created by the mysterious Satoshi Nakamoto, emerged as a beacon of hope. This new digital currency promised transparency and freedom from the control of banks and governments. The early adopters were a mix of cryptography enthusiasts, libertarians, and tech-savvy individuals. They saw the potential of Bitcoin to revolutionize the way we think about money. Online forums buzzed with excitement as Bitcoin's price began to rise. It was an exhilarating time filled with the promise of a decentralized future. Mt. Gox, from Magic cards to Bitcoin domination. Mt. Gox didn't start as a Bitcoin exchange. In fact, it had quite a different beginning. It was initially a platform for trading Magic: The Gathering cards. This popular card game had a dedicated following, and Mt. Gox provided a space for enthusiasts to buy, sell, and trade their cards. Its founder, Jed McCaleb, saw the potential of Bitcoin and quickly pivoted the site to become a Bitcoin exchange. He recognized the growing interest in cryptocurrency and decided to transform Mt. Gox into a platform that could cater to this new market. This was in 2010. The world of Bitcoin was still in its infancy, and there were very few places where people could trade this digital currency. The concept of decentralized digital money was still novel and intriguing to many. Mt. Gox quickly became the go-to platform for buying and selling Bitcoin. Its user-friendly interface and the ability to trade Bitcoin easily attracted a large number of users. It was easy to use and had a large user base. People from all over the world flocked to Mt. Gox to trade Bitcoin, making it the most popular Bitcoin exchange at the time. The platform's simplicity and accessibility were key factors in its rapid growth. At its peak, Mt. Gox handled over 70% of all Bitcoin transactions. This massive volume of trade solidified its position as the leading Bitcoin exchange. This dominance gave it an air of legitimacy. Many people saw Mt. Gox as a reliable and trustworthy platform for their Bitcoin transactions. It became synonymous with Bitcoin trading. People trusted Mt. Gox with their Bitcoin. They believed their digital assets were safe and secure on the platform. The trust in Mt. Gox was a testament to its perceived stability and security. Little did they know, trouble was brewing beneath the surface. Despite its outward appearance of stability, Mt. Gox was facing significant challenges that would soon come to light. The cracks in its foundation were about to be exposed. Cracks in the foundation, early warning signs at Mt. Gox. Looking back, there were warning signs that all was not well at Mt. Gox. There were reports of delays in withdrawals. Some users complained about difficulties accessing their funds. However, these concerns were largely dismissed. People attributed them to the growing pains of a rapidly scaling platform. In June 2011, Mt. Gox experienced its first major security breach. Hundreds of thousands of bitcoins were stolen. While this should have been a major red flag, Mt. Gox downplayed the incident. They assured users that everything was under control. This lack of transparency would prove to be a fatal flaw. Section 5. The day the Bitcoin world stood still, Mt. Gox collapses. February 24, 2014 is a day etched in the memory of every early Bitcoin investor. It was a day that would forever change the landscape of cryptocurrency trading and shake the very foundations of the digital currency world. The events that unfolded on this day would be remembered as a pivotal moment in the history of Bitcoin. Mt. Gox, once the largest Bitcoin exchange in the world, halted all trading. The website went dark without warning. Confusion and panic ensued as users were left in the dark, unsure of what had happened to their investments. The sudden disappearance of the platform left many in a state of shock and disbelief. Rumors spread like wildfire through online forums. Speculation ranged from technical glitches to hacking incidents. The lack of official communication only fueled the chaos. People were desperate for answers, and the silence from Mt. Gox was deafening. The worst fears of many were confirmed when Mt. Gox filed for bankruptcy. The announcement sent shockwaves through the Bitcoin community, as it became clear that this was not a minor issue, but a catastrophic failure. The scale of the collapse was unprecedented, and the ramifications were felt far and wide. The company revealed that it had lost a staggering 850,000 bitcoins. This revelation was met with disbelief and outrage, as it represented a significant portion of the total bitcoins in circulation at the time. The enormity of the loss was hard to comprehend. At the time, this was worth around $473 million. The sheer scale of the loss was unprecedented and left many questioning the security and viability of Bitcoin as a whole. The financial impact was devastating. It was the largest theft of Bitcoins in history. The incident highlighted the vulnerabilities in the cryptocurrency ecosystem and underscored the need for better security measures. The lessons learned from this event would shape the future of digital currency security. The impact was immediate and devastating. Investors who had placed their trust and savings in Mt. Gox were left with nothing. The sense of betrayal was palpable. The emotional toll on the community was immense. The price of Bitcoin plummeted. Investors lost their savings. The market was in turmoil as the value of Bitcoin dropped sharply, erasing months of gains in a matter of days. The volatility of the market was on full display. The reputation of Bitcoin was severely damaged. The Mt. Gox collapse served as a stark reminder of the risks involved in the nascent world of cryptocurrency, and it would take years for the market to recover from this monumental setback. The road to recovery would be long and arduous. Section 6. Missing Millions. The Search for the Lost Bitcoins. The collapse of Mt. Gox sparked a frantic search for the missing Bitcoins. Where did they go? Who was responsible? Some speculated that it was an inside job. Others pointed fingers at hackers. Conspiracy theories abounded. The investigation was complex and shrouded in secrecy. Years later, some of the stolen Bitcoins have been recovered. However, the majority remains missing. The mystery of the missing Mt. Gox Bitcoins continues to fascinate and frustrate the crypto community to this day. Section 7. Picking up the pieces, the aftermath of Mt. Gox. The collapse of Mt. Gox had a profound impact on the cryptocurrency world, shaking its very foundation. It was a wake-up call for the entire industry, highlighting vulnerabilities. The lack of regulation and oversight was exposed, causing widespread concern. The need for stronger security measures became glaringly apparent to everyone. Investors were left reeling, many questioning their faith in Bitcoin and other cryptocurrencies. The incident cast a long shadow over the crypto market, affecting trust. It took years for Bitcoin to recover from the Mt. Gox scandal, but it eventually did. Section 8. From the Ashes. Resilience and Innovation in the Crypto Community. Despite the devastating impact of Mt. Gox, the cryptocurrency community proved to be resilient. The collapse sparked a wave of innovation. New exchanges emerged with a focus on security and transparency. Hardware wallets, which offered greater protection for investors' funds, became increasingly popular. The Mt. Gox scandal forced the crypto industry to grow up. It led to the development of more robust infrastructure and practices. In a way, the collapse of Mt. Gox was a necessary evil. It exposed vulnerabilities in the system and forced the industry to address them. Section 9. Lessons learned. Mt. Gox as a turning point. The Mt. Gox scandal holds valuable lessons for the cryptocurrency industry. First and foremost, security is paramount. Exchanges and individuals must prioritize the security of their funds. Secondly, transparency is crucial. Companies operating in the crypto space must be open and accountable to their users. Thirdly, regulation is necessary. While the decentralized nature of cryptocurrencies is appealing, some level of regulation is needed to protect investors and prevent fraud. The Mt. Gox collapse was a painful but necessary lesson. It forced the industry to confront its weaknesses and strive for a more secure and transparent future. Section 10. The Future of Crypto, a Look Ahead. The cryptocurrency landscape has changed dramatically since the days of Mt. Gox. Bitcoin has matured. Thousands of new cryptocurrencies have emerged. The technology has advanced significantly. While the Mt. Gox scandal was a major setback, it did not derail the progress of cryptocurrencies. The future of crypto is still being written. Will it revolutionize finance? Will it create a more equitable world? Only time will tell. One thing is certain, the lessons learned from the Mt.